Welcome back, and joining me for a closer look of the day's trading session is Cremen from AdviceWorx. Thank you so much for your time, Caroline. Let's actually start off with the local economic data that we got. Retail sales rising 4.2% year on year in May. Of course, we are looking back 2 months ago. Though it is thinner growth than we did see in May, I would imagine that this is still encouraging.
It is definitely encouraging. Our consumer is definitely more resilient. We like to shop for clothing, and we like to, shop for food, and that's good to see. Even though it's slightly down in April, I think April was just a very, very, very strong month, and that just goes. It's also reflected in, I guess you said, the electronic payment data that you did see. I think the only thing that was lagging in that figure was your hardware and construction. Maybe in the cold months, people not too keen to get started on that at all.
Yeah.
But a good sign all in all.
Okay. I can definitely see that. And really, that's been a continuing trend with those hardware retailers really still feeling the pressure there. Well, as we're talking about retail sales, as much as we love shopping, the luxury, the high income earner also still liking luxury. We had Richemont coming out with an update for its quarter ended June, and constant exchange rates, the sales growing 6%. Different growth levels when you look at the different divisions and also the geographies. But I mean, judging from the kind of muted, slightly green trading on Richemont, I would maybe say that the numbers were satisfactory. Would you be in agreement?
Yeah, I think satisfactory is probably a good thing to say. In constant currency, the sales were only up 3%. But it was actually interesting to actually read into the results as to where that growth was coming from. So first of all, it was jewelry, not watches.
Yeah.
So like we like to do shop for clothing in South Africa, the rich like to shop for jewelry apparently. But also it was from the Americas and Europe that you saw the growth. And again, it was China and Japan that were the laggards. The rest of Asia actually made up for China and Japan a little bit. So this is almost like a leading indicator of where you're kind of seeing the stress in the market. So really interesting to see that the US and Europe, despite tariffs and everything, actually still looking quite strong.
All right. Well, let's get into Impact Paper and Plastics. They released an interim trading statement today from continuing operations, saying that they expect an uptick in revenue of 3%, but the bottom line forecast to slump by as much as 28%. Just get into the dynamics of that performance, where it seems that paper performed better than plastics.
Yeah, definitely. But they lost apparently 2 contracts in the plastics division, so that probably did assist with the downswing. I mean, it wasn't a great set of results. I think your HEPS are down, I think between 30 and 40%. I think the only really good thing that you can kind of look at those results and say is that at least their debt is down a little bit. So revenue growth of only 3% is not great. Hopefully they can actually get some extra contracts in, and we'll see a slightly better result in the second half.
All right. Well, as we were talking about jewelry, of course, we know that a lot of that is gold. So let's get into the company, a company that mines gold, and that is Anglo Gold Ashanti. So they're buying Augusta Gold with assets in Nevada. I do note that they are listed in Canada. This is for over $100 million, and it is at a premium. What does this mean for Anglo Gold Ashanti?
Well, I think it's interesting for to look at it for 2 different ways. Is the first of all, there is a consolidation in the industry. Bigger is better. You get to reduce costs, and certainly for Anglo Gold, their strategy has been to increase their long-term reserves. So that's number one. It's interesting the timing, because you're almost really doing it at a market high, and I think it was the Gold Council came out sometime this week when they said they kind of expect the gold price to stay relatively where it is for the rest of the year. So they're buying at a peak, but clearly they're probably looking more for long-term strategy than an immediate uptick in this purchase.
Yeah, and it's quite interesting also that you point out that they're buying it at a peak, and I guess also they can afford that premium that they are paying for that company. Well, let's get into U.S. bank earnings. We had 3 banks out with numbers yesterday and today, and really continuing the momentum of beating analyst estimates. So today we had Bank of America, Goldman Sachs, and Morgan Stanley. Your take on the drivers of those bank earnings?
So it's really been interesting because, of course, we look at US banks, because they're almost like a leading indication of what is happening in that economy. And it's very difficult to see what's happening in that economy at the moment because of all the tariff nonsense that is going on. So I think the couple of things that you can take out of that, first of all, is that trading income was very high. So I think this is the reason why most of those banks actually managed to beat expectations. So quite possibly a lot of that trading has been around market volatility. So can you repeat it in the next half? We'll wait and see. But what was also interesting is that their interest revenue was actually still high. Now that's obviously they're a beneficiary of the fact that interest rates haven't decreased that much, and they've managed to increase charges. And I think the third thing that I took from all of those bank earnings is that for the most part, they actually reduced their credit loss provisions. And I think commentary from a lot of people, including Jamie Dimon, from JP Morgan, actually said that they're seeing that the consumer, US consumer, is actually still very strong, which is quite a nice thing to see, because you don't want to see the US go into recession at all. And I think what thing that a lot of them mentioned is that that there are potential geopolitical and macro risks ahead. So they're not taking their eye off the ball, but I think most of all, it was really surprisingly strong.
All right. Well, Caroline, let us get to your stock pick for today. Where are you finding opportunity?
Okay, well, I'm looking at emerging markets, and it's a company called Han ETF, and the share code is EMQQ. It is the Emerging Markets Internet Exchange Traded Fund. Now, the emerging markets have got a growing middle class. The penetration of the internet and internet services like search engines, online shopping, gaming is not actually as pronounced as it is in developed markets. So there's probably still a lot of upside there. What I like about this ETF is that it does cap the China exposure. It also caps I think the exposure of China is capped at 45%. But it gives you access to some really, really good emerging market companies. So you're going to get Mercado Libre, you're going to get Tencent, Alibaba, Sea, NetEase, even Naspers is in there. So a nice area of the world and a nice sector in the world to actually have exposure to.
All right. Well, thank you so much for your time and for your insights on what has moved investors' money today, Caroline. Really appreciate it. That was Caroline Cremen from AdviceWorx.